Good morning, directors. Welcome to the Board of Directors meeting of Rancak Niaga Fertilizer Berhad. To satisfy secretarial and visual audit requirements, please keep your cameras on throughout the session. If you are not presenting, kindly mute your microphones. Before I start, may I confirm that all of the Board of Directors are here by raising up your virtual hands. Thank you, all of the Board of Directors. You may raise down your virtual hands. I am pleased to confirm that all 10 Board of Directors and myself are present in this virtual room. A full legal quorum is established in accordance with our company's constitution. Mr. Chairman, the meeting is ready to be called to order.
Okay, thank you, Mindy. Good morning, fellow board members. I officially call this Board of Directors meeting of Rancak Niaga Fertilizer Berhad to order at 10 a.m. today. This meeting is convened in compliance with the Malaysian Companies Act 2016. I must remind all directors under Section 221 of the Act to declare any direct or indirect interest in any of our agenda items today, and to abstain from voting if such interest exists. We shall use the raise hand function on Microsoft Teams to conduct our voting, which Mindy will record. Mindy, please state the agenda.
Thank you, Mr. Chairman. The agenda for today is Item 1, approval of previous minutes. Item 2, acceptance of audited financial statements for financial year end 31st December 2025. Item 3, re-election of directors retiring by rotation. Item 4, directors' remuneration and benefits. Item 5, acceptance of auditor resignation and new auditor proposal. Item 6, financial challenge from the Iran war crisis. Item 7, proposed conversion from public to private company. Item 8, proposed share buyback of 1.5 million units. Item 9, technical briefing on private entity exemption. And item 10, any other business.
Excellent. Are there any modifications or additions to the agenda? All right, if no, seeing none, we shall proceed immediately with agenda item 1. Okay, so let us address item 1. Mindy, could you confirm the status and distribution of the minutes of our previous board meeting held on 15 March 2026?
Yes, Mr. Chairman. The minutes of the previous meeting held on 15 March 2026 were compiled and circulated to all directors on 18 March 2026 via email. Under Section 343 of the Companies Act 2016, minutes duly signed by the chairman serve as prima facie evidence of the proceedings. I have received no written objections or corrections requests to date.
I have reviewed those minutes thoroughly and find them to be a highly accurate representation of our previous discussion and resolutions. I propose that they be formally confirmed and approved.
I'm happy to second that motion.
Thank you. I call for a resolution. Resolution 1, that the minutes of the board meeting held on 15 March 2026 be confirmed as a true record. Please raise your virtual hands if in favor.
Thank you, all of the Board of Directors. You may raise down your hand. The resolution is carried unanimously.
Excellent. Let us move on to agenda item 2. Okay, so item 2 covers the audited financial statements for the financial year ended 31st December 2025. I request our Executive Director of Finance, YING, to present the core financial outcomes and our audit chair, OLIRMATHY, to update us on internal controls.
Thank you, Mr. Chairman. For the fiscal year ended 31st December 2025, our revenue was 185.4 million, representing a 6.2% decline from last year 197.6 million. This was caused by raw material supply chain disruptions stemming from the geopolitical crisis in Iran. Consequently, our gross profit margin compressed to 80.3% and net profit after tax fell to 12.7 million. On the balance sheet side, our cash reserve remained highly robust at 28.6 million, and our total equity stands at 213.5 million, keeping our gearing ratio at a conservative 0.28 times. The draft financial statement have received an unmodified, clean audit opinion from East and Young.
To supplement Ying's financial summary, the Audit Committee reviewed this financial statement alongside the Auditor's Management Letter on 10th May 2026. The Auditor noted a minor improvement required in manner journal approvals and inventory costing methods. Management has already implemented remediation plans for these issues. Under Section 340, Subsection 1, Paragraph A of the Company Acts 2016, we recommend these statements to be accepted for tabling at our upcoming 23rd AGM.
I note that trade receivables increased by 12% this year. What credit control steps are being taken to protect our working capital?
We have tightened credit approval and initiated weekly collection follow-ups. Our cash reserve shows that these policies are working, and we expect that receivable levels to normalize by next quarter.
Outstanding. I call for a vote. Resolution 2, that the audited financial statements for the year ended 31st December 2025 with the Directors and Auditors report to be accepted for tabling at the 23rd AGM. Raise your hands if in favor.
Thank you all of the Board of Directors for raising your hand. The agenda is carried unanimously.
All right, let us proceed to item 3. So, Mindy, please summarize the rotation and re-election parameters for this year's AGM.
Yes, Mr. Chairman, under Section 205, Subsection 3 of the Companies Act 2016 and Article 94 of our Constitution, at least 1/3 of our directors must be retired by rotation at each AGM. For our board of 10 directors, this requires 3 directors to retire. According to the Register of Directors, the 2 longest in office since their last election are Mr. Kok Jahau and Mr. Mohamad SYAZUAN bin Yahya. Furthermore, under Section 208, Subsection 4 and Article 100, any director appointed to fill a casual vacancy during the year must also seek re-election. This applies to our newly appointed director, Ms. Niviashine, who was appointed on 7 February 2026.
So, to be absolutely clear for our minutes, the 3 directors retiring and seeking re-elections at the 23rd AGM are Mr. Kok Jahau and Mohamad SYAZUAN bin Yahya under Article 94 and 96, and Niviasyiini Anak Perempuan MURUGANANTHAN under Article 100. Is that correct?
Yes, that is correct.
I confirm that I am happy to offer myself for re-election. I look forward to contributing to our long-term strategic recovery.
I confirm my intention to offer myself for re-election as well. I support the re-election for Kok Jahau and Mohamad SYAZUAN to maintain the board continuity.
I concur. Board stability is critical as we navigate our supply chain issues. I fully support recommending all 3 candidates to our shareholders.
Thank you. I note my conflict of interest regarding my own re-election. Resolution 3, that the re-election of Kok Jahau, Mohamad SYAZUAN bin Yahya, and Niviasyiini Anak to be proposed to shareholders at the 23rd AGM. Raise your hands if in favor.
Thank you all of the Board of Directors. You may raise down your hands. The resolution is carried unanimously.
Right. Now let us address agenda item number 4. Mindy, what is the legal position and recommendation regarding directors' remuneration and benefits for the period up to the 2027 AGM?
Under Section 230 and Subsection 1 of the Companies Act 2016, directors' fees and any benefits payable to directors of a public company must be approved by shareholders at a general meeting. The Nomination and Remuneration Committee met on 5th May 2026 to evaluate current market rates.
Yes, our committee has proposed director fee up to an agreement RM 800,000 and other board benefit up to 100,000 for the period from 22 May 2026 until the conclusion of our next AGM in 2027. This package is benchmarked against comparable publicity listed chemical and agriculture firm in Malaysia and accounts for our active board and committee schedules.
From a financial planning perspective, I confirm that this proposed 900,000 package represents less than 1% of the company's net assets. It is fully integrated into our operating budget and cash flow projections and will not impair our recovery plans.
I find the proposal balanced and fair. Given the complexity of navigating the current geopolitical challenges, the board's responsibilities have increased significantly.
Thank you. Resolution 4, that the board approve the proposal to seek shareholder approval at the 23rd AGM for directors' fees up to 800,000 ringgit and benefits of up to 100,000 ringgit for the period ending at the 2027 AGM. Raise your hand if in favor.
Thank you, all of the board of directors. You may raise down your hand. The resolution is carried unanimously.
Okay, we now move to agenda item 5, which deals with the resignation of our current auditor, Ernst & Young PLC EY, and the proposed appointment of PricewaterhouseCoopers PwC for the financial year 2027. Mindy, please present the legal requirements.
Under Section 281, Subsection 2 of the Company Act 2016, an auditor may resign by giving written notice. EY provided their notice on 15 April 2026, stating that their resignation is due to internal staffing constraints and portfolio realignment. Effective upon the conclusion of this AGM, they have confirmed that there are no circumstances of disagreements that need to be brought to the attention of our shareholders under Section 281, Subsection 4.
The Audit Committee initiated a detailed tender process and recommends PricewaterhouseCoopers as our new auditors. PwC heavily experienced in manufacturing and agribusiness. Their proposed audit fees are highly competitive and they have confirmed their independence.
The finance team has already coordinated with both firms to ensure a seamless transfer of working papers and transition schedules. The handover will be completed immediately following the AGM with no disruption to our financial control.
Excellent. I call for votes on both resolutions. Resolution 5A to accept the resignation of EY as auditors, effective at the AGM conclusion. Resolution 5B to propose the appointment of PwC as auditors for financial year 2027 at the 23rd AGM. Please raise your hands.
Thank you, all of the board of directors. You may raise down your hands. Both resolutions are carried unanimously.
All right. Let us address item number 6. The ongoing war crisis in Iran has created unprecedented disruptions in the fertilizer industries. I would like our management team to walk us through the operational and financial implications and our mitigation strategy.
Financially, global urea and ammonia prices have spiked by 38% and 45% respectively due to Iranian export bottlenecks. This has directly compressed our margins. Furthermore, we are facing foreign exchange volatility because our feedstock is priced in USD. To protect our cash flow, we have designed an expanded forex hedging program and are negotiating an increase in short-term trade facilities with our bankers.
Operationally, shipping transits through the Strait of Hormuz have delayed raw materials deliveries by up to 4 weeks at our Kulim High-Tech Park facilities. We have responded by shifting our production focus to high-margin specialty and PK formulas rather than commodity-grade urea. We recommend maintaining at least 60 days of critical raw material inventory as an operational safety buffer.
On the market side, while Middle East export volumes decrease, our domestic sales to major oil palms plantation remain highly resilient. We have pushed price increases of 8% to 12% in the domestic market to offset our input cost inflation. We are also shifting our export focus towards Southeast Asian markets, particularly Vietnam and Thailand, aiming to raise regional sales from 50% to 25% of total export.
R&D is accelerating development of bio-based organic fertilizer formulations. These formulations use local raw materials and nitrogen-fixing bacteria, which will eliminate our vulnerability to global urea pricing. We have partnered with UPM and expect to launch field trials within 6 months. We require an R&D budget increase to RM 3.5 million for financial year 2027 to accelerate this.
To support these efforts, we have onboarded alternative feedstock suppliers from Russia, Morocco, and Canada. To address shipping route delays, we are investing 800,000 in a digital supply chain platform to track and manage our international shipments in real time, reducing procurement cycles by 20%.
This is a highly comprehensive response to the crisis. Resolution 6, that the board accept the departmental reports on the Iran war crisis, endorsing A. Raw material supplier diversification, B. The R&D budget increase, C. Quarterly updates on Southeast Asia's exports, and D. A detailed business case for the 800,000 ringgit supply chain software. Raise your hand if in favor.
Thank you all of the Board of Directors. The resolution is carried unanimously.
Right. Let us open the floor on item 7, regarding the proposal to convert our status from a public company to a private company. Mindy, what is the legal and procedural path?
So, under Section 41, Subsection 1 of the Companies Act 2016, a public company can convert to a private company via a special resolution passed by a 75% shareholders vote. Under Section 2, Subsection 1, a private company must restrict share transfers, limit its member to 50, and prohibit any public invitation to subscribe for shares or debentures.
Our primary driver for exploring this conversion is the significant compliance costs and administrative burden of maintaining our listed status. We estimate our listing compliance costs, including regulatory fee, PR, and audits, at 2.8 million annually. Transitioning to a private company would yield substantial recurring savings.
While the cost savings are high, we must consider that we will lose public capital market access. If we convert, we cannot raise capital through public shares, leaving us reliant on public placements and existing shareholders.
True, the transition process itself is complex and expensive, with legal, delisting, and advisory costs estimated at 1.5 million. It would take over 2 years of compliance savings to break even.
There are also qualitative risks. Listed status support our employer branding when requiring top-tier managers. Transitioning to a private entity could impact the talent acquisition.
From a supply chain perspective, many of our global suppliers structure our credit lines and insurance based on our public financial profile. A private conversion could lead to tighter credit terms.
Alright, given these extensive operational and financial variables, a hasty decision is not advised. Resolution 7, that the board acknowledges the preliminary proposal and directs management to commission a comprehensive feasibility study on the conversion to be presented at the next meeting. Raise your hands if in favor.
Thank you all of the Board of Directors. The resolution is carried unanimously.
Alright, so now let us proceed to item 8 regarding the proposed share buyback mandate up to 1.5 million units. Mindy, what is the legal framework?
Share buybacks are regulated under Sections 127 to 140 of the Companies Act 2016. Under Section 127, subsection 1, shares may be repurchased using retained earnings and held as treasury shares or cancelled. Crucially, Section 130 requires the board to satisfy a rigorous solvency test and sign a solvency statement before executing any transaction.
This buyback of 1.5 million units, representing roughly 1.5% of our issue share, has multiple strategic advantages. It signals our extreme confidence in our long-term recovery to the market and mathematically enhance our EPS and ROE. It's also simplified our cap table if we eventually pursue the private company conversion.
Using current market price, the estimated cash required is approximately 1.8 billion ringgit. However, because our working capital is tight due to the Iran crisis, we must manage this cash carefully. I advise that the buyback be approved in principle but executed in small tranches subject to cash flow comfort.
From a commercial perspective, launching the buyback mandate sends an excellent signal to our plantation customer and supplier that the board is confident in our financial health.
I agree, provided we do not compromise our capital expenditure for R&D or digital supply chain. Capital preservation must remain our priority.
Excellent points of caution. Resolution 8, that the board approve proposing a resolution at the 23rd AGM to buy back up to 1.5 million units of the company's shares, subject to A. Compliance with Section 130 solvency requirements, B. Execution in tranches at management's absolute discretion based on cash flow, and C. Monthly reporting to the board. Please vote.
Thank you to all of the Board of Directors. The resolution is carried unanimously.
All right, now let us address agenda item number 9. This is a technical briefing on the financial reporting exemptions available under the Malaysian Private Entities Reporting Standards, MPRS. Since this relates directly to our corporate conversion study, I invite our special reporting lead, SUTHA, to present the findings from our discussions with the auditors.
Thank you, Mr. Chairman. Under the framework set by the Malaysian Accounting Standard Board, MASB, companies are divided into two tiers. Tier 1, entities use Malaysian Financial Reporting Standard, which is known as MFRS, which is mandatory for listed public companies. Tier 2, entities are eligible to adopt the Malaysian Private Entities Reporting Standards, MPRS. If we convert to a private company, we will qualify as a private entity because we will no longer have public accountability or public listed security. Adopting MPRS provides three critical advantages. First, simple accounting standards, particularly for financial instruments and revenue recognition. Second, reduce audit disclosures, eliminating mandatory segment reporting and extensive fair value disclosures. Third, lower audit overheads. We estimate that transitioning Empers will save the company between RM 300K to RM 500K annually in administrative and audit-related fees.
Those savings are highly attractive. However, we must account for first-year transition costs, such as restarting our comparative financial statement under Empers, which we estimate will cost between 200,000 and 400,000 in advisory.
The reduced reporting complexity will be highly beneficial, freeing our finance team to focus on commercial analysis and cost controls.
However, we must note that reduced financial disclosure can sometimes make us look less transparent to foreign research bodies or government grant committees. The risk must be evaluated in our feasibility study.
If we adopt MPRS and subsequently choose to relist on the Bursa Malaysia in the future, what will be the impact?
Relisting would require us to retroactively restate 3 years of financial statements back into MFRS, which is highly expensive and complicated process. Therefore, conversion must be treated as a long-term strategic decision.
This is excellent technical insight. Resolution 9, that the board acknowledges the technical briefing on private entity exemptions, directing that these findings be integrated into the corporate conversion feasibility study. Raise your hands if in favor.
Alright, thank you for all of the board of directors. You may raise down your hands. The resolution is carried unanimously.
Alright, we have arrived at agenda item 10. Any other business? Are there any other matters that any director wishes to bring forward?
Yes, Mr. Chairman. First, regarding our 23rd Annual General Meeting under Section 316, Subsection 2 of the Company Act, we are required to provide at least 21 days notice to shareholder. Since our Annual General Meeting is scheduled for 21 May 2026, MINDY has confirmed that the notice was successfully issued on 28 April 2026, satisfying the statutory requirement.
Yes, I confirm that the notice of AGM was dispatched to all registered members exactly 23 days prior, complying fully with Section 316.
On the sales side, we have identified a new opportunity with a large agriculture corporation in Vietnam for a long-term supply of our specialty NPK compounds. With an annual contract value estimated between 12 million and 15 million, I will present a full business case at the next board meeting.
On logistics, the supply chain team plans to participate in the Malaysia International Agribusiness Exhibition next month to source new regional transport partners. We request budget approval of 45,000 to set up our booth.
I support the exhibition proposal and will approve the 45,000 request within my managing director's authority limit.
Excellent work. Are there any other matters? Alright, seeing none, we shall proceed to the closing. Okay, so, directors, we have completed all agenda items for today's meeting. Let me summarize our key resolutions. Resolution 1, minutes of the previous meeting confirmed. Resolution 2, audited financial statements accepted for tabling at the 23rd AGM. Resolution 3, reaction of Kok Jahal, MOHAMAD SYAZUAN bin YAHYA and NIVIASYINI MURUGANANTHAN proposed for AGM approval. Resolution 4, proposed directors' fees up to 800,000 ringgit and benefits up to 100,000 ringgit approved for AGM. Resolution 5A and 5B, acceptance of EY's resignation and proposal of PwC as new auditors. Resolution 6, endorse raw material diversification, the R&D budget increase, quarterly export reports and the supply chain digital platform business case. Resolution 7 commissioned a comprehensive feasibility study on corporate conversion. Resolution number 8 proposed 1.5 million units of share buyback mandated approved by AGM. Resolution number 9 technical findings on private entity exemptions accepted for the feasibility studies. I want to thank every directors for your highly professional strategic contributions today. We have addressed critical challenges within unified focus. Mindy, please circulate the draft minutes of this meeting within 48 hours for review.
I will do so, Mr. Chairman. All resolutions passed are properly recorded and will be added to the company's statutory records. The meeting is officially concluded at 1:30 p.m.
All right, so thank you, everyone. This meeting is officially adjourned. Have a wonderful afternoon.
Thank you, Mr. Chairman.
Mr. Chairman.
Thank you, Mr. Chairman. Good afternoon.
Thank you, Mr. Chairman. Good afternoon.
Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Good afternoon.
Thank you, Mr. Chairman. Good afternoon.